What is going on, guys? This is Mikey coming at you for a quick crypto chat. And today I want to go over some big news in the crypto space, and it has to do with institutional investors. Okay, so the first US pension fund takes the plunge on crypto investing. Very, very big news. Okay, so Morgan Creek Digital has scored what it says is probably the first investment in the crypto asset universe from a US pension fund. Two pension plans in Fairfax County, Virginia, are anchor investors in a new $40 million venture capital fund, according to a statement from the company. Other investors include an insurance company, a university endowment, and a private foundation, said Morgan Creek Digital founder Anthony Pompliano, who declined to provide further details. Very interesting. Many institutional investors, which crypto enthusiasts believe will be drawn to digital assets because of their volatility and potential outsized gains, have been deterred by market manipulation and a lack of regulation. The Virginia pension funds join a handful of institutions to invest in the crypto world, including Yale University, the second largest endowment in higher education that invested in a digital asset fund last year. So Yale's already up to speed. Yale's already put some skin in the game. They're already, they're already involved, along with many other institutions that I'm going to get to a little bit, later on in the video. But right now, we're focused on what Morgan Creek Digital is doing. And the founder, Anthony Pompliano, he's over there working his ass off. He's over there explaining this technology, to different hedge funds and institutions and people with deep, deep pockets. Okay, these aren't your average Joes, okay? These are people that manage hundreds of billions of dollars, if not trillions of dollars, that these people are communicating with. They're betting on innovation. The whole thing is about innovation, and that's exactly what Bitcoin offers, and the technology behind Bitcoin, the blockchain. Okay? Fairfax County Retirement Systems manages three separate defined benefits plans, two of which invested in the Morgan Creek Digital Fund, said Pompliano. Catherine Malner, chief investment officer of one of the funds, said in a statement that blockchain technology, which was first developed to record the movement of Bitcoin, is an emerging opportunity that offers an attractive asymmetric return profile. I mean, if you look at Bitcoin from just a pure investment standpoint, you'll notice that, the amount of gains over the past, what, has it been 10 years now? The amount of gains that you've seen in the past 10 years are ridiculous, and they continue to rise higher every single year. The only year that Bitcoin did not appreciate in value was most recent, 2018, and that's because the bull run that sent it from 3 grand to 20 grand is now deceased. That run up is gone, and we've been consolidating ever since, okay? So we hit a peak of 20 grand and we lost a lot of value, US dollar value, that is. But that does not mean that it's over. This is just the beginning, ladies and gentlemen. This is the very, very beginning. Pompliano said his new fund is structured like a traditional venture capital fund that will invest in the equity of companies in the blockchain and digital assets industry. The fund will also hold a small percentage of its value in liquid cryptocurrencies, such as Bitcoin, said Pompliano. Bitcoin lost about 75% of its value in 2018. That's what I was touching on. I mean, when we went from, those low numbers to 20 grand, what goes up must come down. It's not rocket science. The market was way overvalued. But as the market starts to pick up momentum and applications are starting to come out and more innovation is happening and, the technology progresses, there's nowhere else to go but up, really. At the prices we're at now, jumping back to US dollar value, if you look at the price of Bitcoin right now, and notice that it's $3,600 all the way up from 19,666. That is ridiculous. People were talking about how they wanted to jump back into Bitcoin. They say, I swear to God, I'll buy Bitcoin as soon as it hits $10,000 again, if it does. And now we're at $3,600, and people are scared. They don't want to get involved. They've been talking a big game, but now that it's cheap, they don't want anything to do with it. Oh, I'll wait till it hits $2,000. I'll wait till it hits, 1,700. I'll wait till it hits 700. It's like, in the long run, when Bitcoin is $250,000 per Bitcoin plus, I mean, you're really going to kick yourself in the ass for not buying Bitcoin right now at these prices. Plain and simple, Moving back to the article that we were reading, there's a belief in the institutional world that if the industry will be around for a long time, it will be very valuable, Pompliano said in a phone interview. The smart money is not distracted by price, but looks at the long-term trends and believes they're betting on innovation as a great way to deliver risk-mitigated returns. Morgan Creek Digital, which is an affiliate of the investment manager Morgan Creek Capital Management, LLC, exceeded its original target of $25 million for the fund. Its pitch: all traditional assets will eventually be represented by digital tokens. The tokenizing of our economy. That's what that's called. While the influx of intellectual capital into digital assets will create positive returns, it also argues that cryptocurrencies are not correlated to traditional assets, giving investors unique exposure. Very, very big news, and just one of many, okay? I can go down the list of different institutional investors that are getting involved right now as we speak. They're creating cryptocurrency trading desks, okay? An ETF is going to be approved in the very near future, all right? And that means once the ETF is approved, okay, it's all fair game for these institutions, all right? An ETF is an exchange-traded fund. It allows you to easily buy and sell Bitcoin on an institutional platform, including high-profile brokerage accounts. And that's exactly what they are. Fidelity, BlackRock, NASDAQ, the Goldman Sachs, ICE, which owns Bakkt, which is a pure powerhouse, okay? They have over 12 exchanges, regulated exchanges, that are prime for market makers, And these are the institutions that are getting involved. Fidelity alone, right? Just Fidelity, not including all these others that I just listed. The BlackRocks and the NASDAQs and the Goldman Sachs. $6.85 trillion, right, for Fidelity Investments. This is their market cap. The NASDAQ, BlackRock, Goldman Sachs, that's not even including them. Just Fidelity is $6.8 trillion. So if you take into consideration that if all of these institutions are getting involved right now, and you just took 1%, not 2%, not 10%, not 20%, just 1% of the total value of all of these institutions, we're talking about a $1.5 trillion market injection, okay? That's really, really big numbers compared to where we're at right now. A measly $120 billion in market cap, okay? You can see that the total market cap is sitting at $122 billion. And if 1% of these institutions get involved, it's not about if they're going to get involved, it's about when. When that happens, we're talking about a long-term projection of like $1.5 trillion, just the money that comes out of their institutions. This isn't including the innovation like we were talking before. Like what happens when these applications are built and more people start using them and more value is starting to be created and people are getting involved and it basically goes down the same path that the internet did. Okay? Imagine the value that we're talking about. Much, much more than 1.5 trillion. We're talking about trillions upon trillions upon trillions. Okay? This is not a joke. This is not a gimmick. This is not a scam. These are facts. Okay? Mixed in with a little bit of my opinion. You got to understand that there's not enough Bitcoin for everyone. There's only 21 million Bitcoin that will ever exist. Okay? You can see that the max supply is 21 million. And right now the circulating supply is 17,535,187 BTC in circulation. And you cannot forget, this is a very, very crucial point, that there are 2 to 4 million Bitcoin that are lost forever. Whether it be because someone lost the private keys, you know, or, that's basically it. They lost their private keys. Those are lost forever. Once you lose those private keys, it's done. Like you just recently heard about the founder of Quadriga X, the Canadian cryptocurrency exchange, that he lost the private keys for his exchange on some level and now all that Bitcoin's gone. Well, that's true. If he didn't save those private keys and put them somewhere safe and he didn't record them anywhere, you're never getting into that wallet. You're never getting into that information ever. It doesn't matter. Now, as much as that might suck, that doesn't mean that Bitcoin got hacked or Bitcoin did, Bitcoin is bad. It just means that the single point of failure, like, marking down this information, this vital information, because you didn't do that, your funds are gone. There's no way to back that up. That's a good and a bad thing, but it's better than anything else that exists out there. Now I'm ranting on, but you have to understand that 17 to 19 million Bitcoin will only be, circulating. So it's even more scarce than we thought. It's the most scarce asset to ever exist in human history. Plain and simple. Okay? Start doing some research. Go to the website. Read the white paper. Take care, guys.